Thank you, Oscar.
Thank you very much, Luca and CAHF, for coordinating all this in terms of the sessions. I'm very excited that today we have this session for the mortgage refinance facilities. We have Tanzania Mortgage Refinance Company here in Tanzania, but I think it's important for people to realize that this concept has been proven in Africa and beyond Africa. So this is just a representation of the mortgage facilities that around the world. Obviously, there's many more, but today we are privileged to have Kehinde Ogundemu, chairperson of AUHF, but he's also the CEO of Nigeria Mortgage Refinance Company. We have Renato Tobias, also the president of the Mortgage Refinance Facility in the Philippines. We have Farouk Zahir, coming from the Pakistan Mortgage Refinance Company. And then our neighbors, Kenya, Johnston Oltetia from Kenya Mortgage Refinance Company. So I wanted to kick off this discussion basically by just a general description of what is going on in our respective markets, just for the audience to appreciate some of the work that we're doing. And let's just take about 3 to 4 minutes to do that. I understand, Renato, you have a presentation, so maybe we start with you with a very quick presentation, and then we'll go to the rest of the panelists, and then we'll have a question to follow that. Thank you.
Okay, what's happening in the Philippines? First of all, our inflation rate is dropping, and our unemployment rate is also dropping. So against that background, next slide. Very recently, our key policy rates are dropping down. So it's trending down to almost, hopefully, by next year, 4.5. We have also reduced our reserve requirement ratio, so that increases the liquidity in the banking system. Next slide. Our gross domestic product is also increasing. The size of our real estate and renting business is approximately 7% of our GDP. So go ahead. Next slide. Now, as a measurement against other countries, what is our mortgage loan as a percentage of GDP? We're, as compared to the rest in our region, we're a bit on the lower, the laggard. So we're 4.10. So there's still much work to be done. Okay, next. Though our per capita income is increasing, so we hope that there's greater affordability to pay the affordable housing. But against increasing per capita income, residential real estate prices index is still increasing. Our population is 114 million. About 66% fall into the millennial and Generation X group. So the average age of our population is approximately 43%. So, next. So, what basically strategies are we adopting in the Philippines? Well, of course, yesterday we were talking about government intervention, which definitely has the power to stimulate or temper the economic activity. We try to continue the cycle of development from delivery to financing the buyer, and then redo it again. And the rest are what I already mentioned, monetary policies adjustments. and thereafter. So that's what's happening in the Philippines in 2 minutes.
Great. Thank you so much for keeping the time. We appreciate it. And these presentations will be available, obviously, to the delegates. So I think we can have the benefit of looking at it in detail at our own convenience. Kehinde, are you ready? Let's hear about Nigeria Mortgage Refinance Company.
Thank you, and good afternoon, everyone. At TMRC, as Simon said, we sit at the end of the value chain, and before anything gets to us, there are so many challenges along the value chain, just even from land administration, titling, and all of that. So we have not been sitting down, not doing anything. We have been saying, how do we either advocate for changes or actually effect changes in the value chain that before it gets to us at the end of it. So let me start with Nigeria itself, just the macro, high level. I think we are still trying to understand the post-pandemic economy. There's been some significant changes. The government has had to take very tough decisions on like subsidy removal and then so many other things just to get the macro right. So we are going through that painful period of transition, but we are confident that we'll come out at the end of it better. So tough macro environment, but at least it's beginning to be predictable, and then hopefully it will end very soon, and then we'll move forward. Given the macroeconomic situation, which has made interest rates astronomically high, inflation is very high, it's about 30%, and all of that, it is difficult to do mortgages in that environment, except you have some concessional funding, at least maybe to do blended finance. We're working on things like that. How do we get funding that will be blended with maybe local issuance to make mortgage rates more affordable? We're also working on other things internally that, okay, even while this might be a big challenge, how do we get the whole transmission mechanism across the value chain working effectively? And so at TMRC, we came up with what we call the model mortgage administration law, which sort of streamlines the entire process of land administration and titling. And I'm happy to report that a few states have passed that. We have 36 states in Nigeria. About 6 states have passed it. I'm going to meet with the governors of about 2 states when I get back to Nigeria, and then there's that critical momentum of people trying to get that through. We believe that if we get that right, we have at least solved one problem. We're also working on the National Housing Data Initiative, which the Honorable Minister of Housing inaugurated about a month ago, and I'm the co-chairman of that initiative with my colleague at the Federal Ministry of Housing, who is the permanent secretary there. We have been working with CAHF for the last 3 years or 2 years on data, and we have all come to that conclusion that for you to be able to measure housing across the continent and to have something that is standardized across the world, you need about 117 data elements. We have identified the issues, those data elements. We have allocated, we know where we will get them from, so Central Bank of Nigeria will give us some of the data. The National Population Commission, which has actually carried out a geospatial survey of the entire country. So we have about 66 million buildings, about 15 million are industrial, the rest are residential, whether they are completed or not, and things like that. So we're beginning to pull all the data together, and the minister has given us about 1 year to come up with something, how we're going to be getting the data. Because without data, there cannot be any policy initiative that will address the issues. So this is a front burner for us, and I'm happy to report that NMRC is driving this. There are also other things that we're also looking at. In Nigeria, for instance, we have dematerialized share certificates. So if you buy shares, everything just moves online. So NMRC has started working with the Central Security and Clearing System, which is the organization, a private organization, a subsidiary of the Nigerian Stock Exchange, that dematerialized share ownership. And we're working with them to see how we can also dematerialize title documents within Nigeria. We'll be starting with a pilot state. We're talking with a vendor. We'll conclude that discussion by the end of this year from Holland, who has done this in Rwanda. And so we're going to be using that system to also help us in this initiative. So there are a few things that we are doing just, at various segments of the value chain to either advocate for changes or to fix the problem. And I'm also happy that some of the development financial institutions that are here are working with us, and so we'll be able to also get some nicely priced developmental funding to blend with our local market. So I'll say a lot is going on, so many things, just trying to make sure that we address the situation as we move along. Thank you.
Great. Thank you, Kehinde, for that very insightful update. We can move to Kenya. Joe, karibu.
Thank you, Oscar. So I also want to set a context, and I have a little data. So we have a party, right, Luca? Now, when you look at the situation in Kenya, inflation currently is at 3.6%, which is just moved down from around 4%. The CBR, or central bank rate, is at 12%. It was around 13% last month. Government debt still high and increasing, currently at 72% of GDP. The market interest rates range between 14% to 18% with an aggregate of about 16%. The mortgage to GDP is terribly low, I don't want to mention. But anyway, it's 1.9%. And over 80% of urban dwellers in Kenya are renting. And almost 60% of that actually live in informal settlements. Now, based on that context, what are we doing to adjust to our realities? What we are essentially doing at Kenya Mortgage Refinance Company to adjust to our circumstances. And there was a question raised yesterday. Are we placing or landing finance in the right place? Can anyone answer that question? From our end, yes, even if you don't want to answer. And this is how we are doing it. You know what? We are giving financing or affordable housing finance to real people, right? Real. And we are addressing two key issues. Number one is affordability. Number two is accessibility. And yesterday somebody asked a question, what's affordability? And I don't know whether there is one answer for that, but in our case, it's income to cost to income ratio, and that of course is dependent on your own circumstances. Accessibility, on the other hand, is more on supply or making or creating affordable houses, and that is matching what people need and what's available. To ensure affordability, and this is real, you know exactly what we are doing currently. We started and we're lending at below the CBR. And somebody certainly is going to ask, how is that? That's very, the CBR essentially is ordinarily or theoretically the lower cost of funds or the lowest cost of funds, but we certainly are still lending below the CBR. Currently, funding is reaching the end user. That is TMRC funds for affordable housing at 9.5%. Remember I mentioned the CBR is 12%. And that is the end user is receiving money at 9.5. We're actually lending at just about 5.5% to the financial institutions. We are extending and we have introduced for the first time fixed rate mortgages in Kenya. 88% of mortgages in Kenya has been on variable rates or floating rate for that matter. But we have since introduced fixed rate, and of course we are lending in single digits. And the other amazing thing, which Maya doesn't really like, we were with her in Mombasa last year on our program, is that we are lending on high LTV. So these are our circumstances. Please don't adopt if it doesn't suit you. But we are actually lending at 105%, which is unbelievable. Anyone will say that's unbelievable high risk. But how are we managing that? We have a backstop arrangement that we are putting together in form of a risk-sharing facility or a mortgage guarantee arrangement, or we establish a little company, Kenya Mortgage Guarantee Trust, which is essentially under KMRC, and that's what we are using to essentially de-risk the end users, and at the same time provide credit default loss protection to the financial institutions. That's the only reason why financial institutions will be ready to lend to the end users. So in a nutshell, what I'm saying is, and to enable accessibility, we still have a bit of a challenge with that because we don't have nearly enough supply of housing. There's a bit more that is going on right now about that, with the government, raiding our pockets to ensure that we have what is called a levy, affordable housing levy, which is essentially meant to help de-risk projects or provide construction finance. And we're, the MD of Shelter Africa and I are running this afternoon to attend a presidential function in Nairobi, which is actually discussing exactly, sorry, not in Nairobi, but in Mombasa, which is discussing exactly that. But we still have a little bit of a challenge with construction finance, but we're doing something to resolve that. Now, when you look at the landscape, we're beginning to see, since KMRC came in, it's not too old, it's just about 5 years in operations right now, but we're beginning to see some increases in mortgages in the country. Last year, particularly, there was an increase by 12%. The number of refinance mortgages by KMRC stood at 9.5% of total outstanding mortgages. And you know what? 47% of that is going to women. KMRC refinance about, in terms of value, about 3% of mortgages in the country. I tried to compare that with other jurisdictions, and I realized, of course, the circumstances are different. Malaysia is actually doing 3.5%, which is, comparable. The tenor is also changing or increasing over time. Obviously, we are keen to increase the tenor because that creates affordability. So we are shifting to 20, 25 years, although our experience shows that people actually don't like long-term funds. They prefer short pay quickly, but what we are telling them is that you need to look at your ability, your ability to access affordable housing finance now. Otherwise, it will be terribly inefficient because you have to keep waiting as you try to save for you to be able to pay for a home. And so our tenors have since increased from around 7.7 years on aggregate in 2021 to 12 years last year. So we, in our view, think we have a few successes. Of course, we are still grappling with one or two challenges, and that's why I said yesterday we have some moving parts that we are trying to fix, and we're going to fix them, and we're going to ensure that we actually deliver home loans so that we have a lasting impact in our communities. Thank you.
Thank you. Thank you very much, Joe. Now let's hear from Farouk from Pakistan. Let's try to wrap up as quickly as possible in the interest of time. Thank you.
I can already see a lot of people waiting for lunch. Greetings from Pakistan. I'm the head of Treasury and Capital Markets at TMRC. Like the challenges all my fellow colleagues stated, these are similar challenges in Pakistan. Post-COVID, we saw our interest rate rise from 6% to 22%, and which made mortgage financing not viable for the consumers. However, within that time, I would like to tell you more about the success stories of PMRC and our topic on mortgage liquidity. PMRC was created 6 years back. When we came into operation, the whole mortgage market was standing at about 80 billion, which is only 0.2% of the entire GDP of Pakistan. Now, Pakistan, you would know, has probably the top 15 GDP in the world. So a number of 0.5% is considerably very low compared to what our neighbors India or our role models like Malaysia or Japan are doing. However, in the last 6 years, PMRC has acted as a catalyst for mortgage financing, and we now see the market has grown up to about 220 billion. And the only reason while we have been able to do that, of course, is how my other colleagues were telling you, is to offer fixed rate financing at discounts to the commercial banks, or how we call them as primary mortgage lenders. Roughly as we speak, around these 6 years, we have been able to support around 60,000 households. So directly or indirectly, our funding has supported 60,000 families to own a home now in Pakistan. Typically, mortgage lending in Pakistan was done through commercial banks. However, we presented them with a lot of models, successful models like Mexico, like India, like South Africa, where informal economy came into play and were the basic bread earners of the economy. Unfortunately, even today, commercial banks are not able to crack out that piece, because they still rely a lot on subsidies from the government. However, on that other hand, we have seen in Pakistan at least that microfinance banks, microfinance institutions, support functions, who at times do unsecured mortgage lending, have been able to crack out larger numbers compared to commercial banks, which is a sad state, unfortunately. And they've been able to do that because of PMRC, of course, offering them fixed rate funding, because you would understand microfinance banks' cost of deposit is much higher compared to commercial banks. Similarly, microfinance institutions solely rely on grants and loans. So PMRC took this initiative and focused on these institutions rather than going out to commercial banks solely. These microfinance banks have been a role model for the commercial banks in Pakistan, because they have gone down to that level of economy which is informal. Again, PMRC was able to do that because of the World Bank funding. PMRC became the largest bond issuer, and I very much agree with my colleague here, Luca, who keeps stressing on how important it is to leverage the capital markets. And so we figured out that we, as an institution which only exists for the last 6 years, you can imagine yourself becoming the largest bond issuer in the country in just 6 years is by no means a small feat. Saying that, the interest rates, as my other colleagues have mentioned, the inflation rate in Pakistan for the last 2 years has hovered around 25 to 30%. So affordability for a lot of mortgage financing buyers is still a challenge, and we're dried up with our liquidity. It is not possible for us to go in the capital markets and issue bonds at an interest rate of 20% and then give a discount of 5%. So it is very, very important for commercial banks, at least in Pakistan, or the regulator, to step up and start probably penalizing these commercial banks, to understand that at the end of the day, mortgage supports 40 allied industries, right? And not only one institution over here cannot just support the entire GDP of a country which is top 15 in the world. So yeah, pretty much about it. As my fellow speakers have already told you, the challenge, important to do securitization, issue covered bonds, and bring microfinance banks, microfinance institution into play.
Great, thank you very much, Farouk. I'll borrow Luca's phrase that all these challenges, we need to turn them into an opportunity. But I also heard a lot of positive things, and maybe to name a few, I really like the idea of the guarantee fund that Kenya is doing. So we can learn something there to provide more room to be able to reach down market. And I think our fellows from Pakistan also entering into the housing microfinance is one of the ways also to go down market. Something that even us in Tanzania, we're embarking on. We're in early days, but we have the opportunity to work with some of the experts in this area. We're working with Habitat for Humanity International, as well as IFC as our partners, to see how to best reach in down market for those who may not qualify for mortgages. And I'm very pleased that we have IFC as well as Habitat. Daniel and Tim, thank you for your cooperation. Having said that, how are we doing at time? Yeah? One question, take just maybe 1 minute, 2 maximum. Just anything that we're doing in our respective jurisdiction for the future in terms of plans that we're planning as mortgage facilities to continue to support the markets. This time I'll start with Farouk.
So we're planning to issue covered bonds and raise liquidity as soon as possible. We've been working with ISMMA, we've been working with EMF-ECBC, and I think that is the only way forward for us to, mobilize cheap liquidity, do securitization, and keep the ball rolling.
Thank you. I have two. Number one, we have to close the loop. So we are on the demand side of housing. So we are providing end user finance. But the supply side is not moving as fast. And that creates a problem because if you don't have the complete picture, then you can offer the funding, all the end user finance, but people will still not be able to access affordable homes. So our approach is to see that we create possibility for construction finance so that we can then be able to start constructing or building homes at scale. Number two, we have a challenge down market, and that's why we have started developing the mortgage guarantee arrangement. But people prefer, at least in Kenya, we had a study that we did with Habitat for Humanity International last year. People actually prefer incremental home development. And our view is that we have to follow the market. So the idea is to start working on arrangement where we can provide people the ability to be able to construct homes. They have the financing, but they nonetheless be able to do decent housing, which may be converted into a mortgage at a certain point. There are certain institutions that are working with us that are talking about micro mortgages and also about off-plan mortgages and things like that. So we're still working on them, but certainly we have to adjust to what people need and provide solutions. Thank you.
Areas to increase our activity in the secondary mortgage market. Number one, we need faster. I guess everybody has this problem about regulators. So it's a faster turnaround in terms of issuing the bonds. That's number one. So the financial sector is very supportive in the sense that it wants to tap the capital markets into housing. That's the good news. The second part is that encouraging developers to move towards the affordable housing market. A lot of people are stuck on the high end. There are laws that require them to do affordable housing, but we'd like to see developers doing affordable housing turning a good profit too, through probably increasing volumes, increasing facilitation of approvals of plans and methodology. So those are the two things that we are working towards a couple of years. Thank you.
Thank you.
I think for us in Nigeria, we're trying to go down markets as well, but we've had regulatory challenges with doing housing microfinance, but we hope that in future we'll be able to do that, even though it will be just a small segment of our population, of our portfolio. We're also looking at rental housing, how we can do maybe securitization of rental cash flows and things like that. So those are things that we're looking to do in the future just to sort of expand our scope. Thank you.
Great. Thank you so much. I know Luca has already stood, so I think it's time for us to go. Now, I know the audience did not get an opportunity to ask questions, but the beauty of it is that we're going to be in this conference together for the next couple of days. So please approach these gentlemen at your own convenience if you have any questions so that we can leave here with information, which is something that we all want to do. With that, let me close, and please help me to congratulate the panel, the panelists here, with a round of applause.
Thank you. Let's get a picture for the ISMMA. Well, just 1 second. Sorry for our social media. The entire ISMMA members are all here, so I think that these gentlemen here are playing an extremely important role, not on affordable housing, but on the affordable ecosystem. And what is the name of? Because the house, as Habib said yesterday, is an extremely, we slightly go to the next panel, so I mean, little by little, we move to the next one. The ecosystem of the house is important for the social stability of a country, because it gives hope to people, but also to the financial stability. Because with mortgages, you can build a very solid asset class for the country, able to go in capital markets, making swaps, managing the risk, also moving the monetary policy in a quicker way. Once that you have covered bonds, as you, Farouk, you can move the transmission of monetary policy in a quicker way. You can manage inflation in a different way. But this can act not only if Farouk moves. No, we have to move all together as a team and bring in something that I would like to just to let you reflect. I'm sure that you, all of you, think that you made it in your life. You succeeded. You have a good job. You had a good education. You made it. You have to be proud of this. But why you have made it this? Because you were sure that with your education, with your system, you could find a house wherever you wanted. I moved to Brussels from my original country as a plan B, because moving to London was too expensive. I couldn't afford a house in London. And I decided to move to Brussels, which was much cheaper than London to house there. And I was lucky that the job that I found, I don't know how, it was bringing me up anyhow, but the hope of every single people is the price of the house that you pay. And making a fixed rate mortgages is making the economy affordable, not only the housing. Because you allow a family to plan, to organize their life, and also to be able to build the future of their kids, and giving the opportunities of your kids. So the affordable housing is a story that is really the seed to build peace and prosperity in an economy, to build a middle class. 1–2% of mortgage to GDP is a sign that your middle class has to grow more. And you have to be ready with these gentlemen to pump money to have the middle class to arrive in things. So that's what we want to need. We need these gentlemen, but we need also the people of the next panel. Allow me to say. I don't know, Kesha, you want to give as soon as they go down. So these gentlemen